fast, guys. Before we get into this, I did want to make you aware I just filmed the video, and for whatever reason, the audio did not match up with the camera footage, and it ended up being super distracting. So I went ahead and cropped that out. It shouldn't matter too much for today's video, but I will get that problem fixed moving forward, guys. Please enjoy the video, and if you do, I encourage you to hit that like button, guys. It really helps out the algorithm and channel growth. I do want to mention, super thankful for all my subscribers, for all the support. You guys are awesome. I look forward to continuing to grow this channel, and we will become the biggest group and best group of dividend growth investors on YouTube, guys. So without further ado, let's get into the May review. What's up, guys? Today we have the May portfolio review. May is actually my lowest earning month in terms of dividends. I will be projected to make $108.63, and that's going to come from 3 positions, guys. Let's check out what those positions are. So on the 15th, I'll have a payment from Realty Income. On the 16th, I will have Apple paying me a dividend. And then on the last day of May, the 31st, I will have Starbucks. Let's get into the portfolio, guys. It is important to note this account is roughly $55,000. That is an all-time high in terms of market value of this account. And right now, it is generating me $2,339 in estimated annual income. So that's pretty sweet. I have spoken on before. My next short-term income goal is to get to that $2,400 mark. That's definitely significant for me because that will average out to $200 per month. And I think that's pretty great. I do have 7 investments in this account. They all pay dividends. And the average dividend yield for this account is 4.28%, guys. And the way this is calculated is by taking the estimated annual income and then dividing by the total market value of the portfolio, similarly to how you'd get a dividend yield for an individual stock. So this number is not actually taking into account my yield on cost on these plays, which is probably quite a bit higher. We will go over that in another video. But let's get into the portfolio. In May, I said I have these 3 payers: Realty Income, Apple Inc., and Starbucks. But let's go ahead and go through every position by market value and what they pay me and when they pay me, guys. So first off, my biggest position in this portfolio right now is Realty Income. That is $11,881 in market value, and that provides an estimated annual income of $663.06, guys. It is important to note Realty Income Corp is my only monthly payer. I really like that in terms of, having that mental kind of aspect of getting paid every single month on the 15th. That definitely keeps me motivated. I do want to continue building out this position, and we have seen a pretty sizable pullback in this one in terms of recently. It is also important to note, guys, that while this is my biggest position by market value, I'm currently down on the position roughly $2,000. Unfortunately, I made the mistake of building out this position a little too fast. I guess I got excited about being, finally being part of the Realty Income boys. And I built this position out a little too fast, and it's kind of left me in a point of, okay, now my cost basis is a little high. I need to get it down, but I already have, over $12,000 invested in this one. With all that being said, I will continue to build this one. I guess short term being the next 10 to 12 months, I would like to get this one to 250 shares, and we will reevaluate at that point. However, it's not really a priority buy for me right now. Okay, moving on, guys. We have Apple Incorporated. AAPL. Everyone knows Apple, guys. I just recently got a new phone, the iPhone 13 Pro. Unfortunately, my other one had some water damage, so, we've talked about it before, but what happens kind of within this Apple ecosystem, guys, you break a phone, your laptop needs fixed. If you're already comfortable using these Apple products, you're typically not going to consider switching. Okay, my phone's broken. Let's get a Samsung Galaxy. I'm not going to get on here and say, oh, the iPhones are the superior phone in the whole world. But I will say this, the ecosystem that Apple has built is very, very impressive in the sense that, users and consumers typically return to Apple when they need a replacement or an upgrade. And I've been saying it, but now we have a real life example, guys. I got the 13 Pro. I don't even know what they're on nowadays. Is it the 15? I don't know. I went with the 13. It seems pretty much the same as what I had before. But anyway, I was pretty excited about that. Like I said, guys, this position is $11,000, $552, and it pays me an estimated annual income of $63, guys. That looks like a pretty small number, but it is important to consider, guys. Apple is a free cash flow beast, and with that being said, a very small percentage of their free cash flow right now is actually going to shareholders in the form of dividends. Okay, so what does that tell me as an investor, guys? It tells me this. It tells me that down the line, 5 years, 10 years, etc., hopefully Apple will aggressively grow this dividend, and that's where I'm really going to get that sweet yield on cost play. Okay, does that make sense, guys? Moving on, the next position we have is Altria. That is a market value of $10,800. Why am I saying it backwards? $10,897, guys. And that pays me almost $1,000 per year. Again, we talk about this in every review. Even though I love Altria, I love that starting yield, and I love that track record of dividend growth and rewarding shareholders, I do have to be mindful of, okay, $980, that makes up a decent chunk of my estimated annual income. And we will get the exact number here, guys. So 980 divided by, 2338.94. Guys, Altria's dividends are currently making up roughly 42% of my estimated annual income. I'm okay with that, with my risk tolerance. However, I do need to realize if something, catastrophic happens to Altria, such as, a big lawsuit, something of that nature, then that could hit my estimated annual income, pretty significantly if Altria did have to scale back their dividend, guys. As you get more experience in this game, and as you kind of find what your own personal risk tolerance is, these are going to be questions you're going to have to ask yourself. I mean, there's no right or wrong answer. Is 42% of my estimated dividend income too much to come from one position? For me, no. I'm 22 years old. I am comfortable with taking this risk. But for other investors, maybe in retirement or closer to retirement age, okay, maybe they want to diversify their income a little bit. Okay, and I'm just bringing up these points, guys. I'm trying to walk you through kind of where I'm at and how I go about crafting my portfolio, guys. This is going to grow and change forever, and I will keep you guys updated on this channel, every single month, as well as once a week. We'll do kind of a dividend analysis or commentary video, guys. Like I said, those come out on Monday at I think I'm going to do Monday at 6 p.m. I was doing Monday at 1:30 p.m. But Monday, the videos come out Monday. That's all you need to know. Moving on, without getting too sidetracked, guys. Next up on the list at that number 4 position, we have Microsoft Corp. MSFT. There's a lot of Microsoft fans on YouTube and in the investing community. And I personally have 20 shares. I've had these shares for a while. Along with Apple, Microsoft and Apple are my two biggest, open, unrealized gains in terms of share price appreciation, guys. These 20 shares currently have a market value of $8,133, and that is generating me an estimated annual income of roughly $60. I'm not going to go on the same spiel that I did with Apple, but we can see here, $60 doesn't seem like a lot for that market value, and Microsoft's dividend yield right now is currently, 74 basis points. But I do want to mention, these tech guys like Apple and Microsoft, who are already tech giants but still able to grow their free cash flow, they have a lot of room kind of in that 5 to 10 year runway to continue growing their dividend. So hopefully we will see them do that, guys. I'm excited about the opportunity, and, we're going to keep an eye on it. I'm holding this one, and I'm really excited about it, guys. Let's move on. The one I've been buying most recently, and, if you guys keep up with my channel, you might be a little bit tired of hearing about Pfizer all the time, but for my personal risk tolerance, Pfizer right now is a great opportunity, guys. I've identified an attractive dividend yield in a company, that in my opinion has kind of had an overreaction to a few negative events. And I think there is some confusion amongst investors with this one, in wake of kind of the COVID revenue. Okay, so Pfizer's foregone COVID revenue. There's been a couple issues with cash, and in my opinion, this overreaction amongst investors has created a great long-term opportunity for someone like me who's trying to come in, lock in that dividend yield. And I'm not as worried about it as, okay, when is Pfizer going to return more to its share, to its fair value? Does that make sense? So I'm trying to lock in this 6% yield with Pfizer. And then after I build out that position, I trust that with time, PFE is going to return to more of a fair value and more of a historical, multiples valuation level. Okay, so I view Pfizer as undervalued, and I have been, taking every opportunity I can to kind of lock in shares of PFE with over a 6% yield, guys. Okay, so just in the past year, I've been pretty focused on buying Pfizer. I've built it out to a market value of roughly $6,000, and that generates me $363 in estimated annual income, guys. I'm going to continue building this one out, but again, with it kind of being a healthcare stock that is sensitive to news, positive or negative, I don't think I'm going to build this one as big as, at least in terms of capital invested. I'm not going to take this one too much higher. Maybe I'd like to get this quantity to 250 to 300 shares. We'll have to see. We'll have to see where the other opportunity lies, guys. And speaking of opportunity, that is a great segue into SBUX, Starbucks Corporation. They missed on earnings last week, and then the stock fell like 17% within the day. Guys, keep in mind I'm filming this on May 6th. But the stock fell 17% within the day. I went from having, paper gains on Starbucks to now having unrealized losses on my Starbucks shares. And I actually have nibbled a few more shares. Just this morning, I added 2. You guys will notice this quantity was at 64. Now it's at 66. I am excited about Starbucks. I am excited about this as a long-term play. I think it's a company with a great moat, and I think investors are panic selling, if you want my honest opinion. Starbucks' ex-CEO took to Twitter and kind of criticized the company. And I don't think that's a very cool thing to do personally. But, it led investors to believe that Starbucks is kind of spreading themselves too thin. They need to get back to their roots of just focusing on being a coffee company. I don't know. What do you guys think about Starbucks' food? I think it's actually gotten a lot better, but apparently the ex-CEO criticized Starbucks for, getting away from their roots. Not to mention Starbucks did have a pretty sizable earnings estimate miss, and, it's driven this one down. But all that says to me as a dividend investor is, okay, let's reevaluate this position. Okay, I don't want to sell these shares. Is it perhaps time to, build out this position to lower my cost basis and, to lock in that starting yield of over 3%, guys? When I initially added, my first bout of Starbucks, which was roughly 60 shares, this dividend yield was not over 3%. So now I need to ask myself, have fundamentals changed with this company? And if the answer is no, or if the answer is negligible, then I need to say, okay, let's continue taking advantage of this opportunity and capturing that over 3% starting yield on a guy that has, pretty aggressively grown their dividend. Okay, I'm not going to sit here and say there's not turmoil, but no, I'm definitely interested in Starbucks, and I'm going to continue to build it, and I'm definitely fired up about doing more due diligence on this one, and I'll definitely keep you guys updated. I just said definitely like 12 times. So that's a $4,800 position, guys, that pays me roughly $151 in estimated annual income. Again, I'm excited about the yield on cost prospects with this one, especially if I can lock in a few more shares down here. We'll have to see, whether I'm more interested in adding to Pfizer, adding to Starbucks. These are definitely kind of my main two focuses right now. Definitely not Apple and Microsoft, and I already spoke on why I'm kind of backing off on the Altria, just in terms of this, the scale of this number. And then, realty income, I'm building slow and steady. And last but not least, guys, we have T. Rowe Price Group Incorporated, TROW. This is a market value of $1,338, and it pays me roughly $60 in estimated annual income. The yield right now is 4.5%, and the share price of it is sitting right at 111. I like this one, and it's probably it definitely is my most recent addition. I was locking in some shares kind of under that $100 mark, but since it's kind of had, a bit of a push up, and we've seen Pfizer continue to fall and Starbucks start to get opportunistic, I haven't really been able to build this one out, kind of as much as I wanted, guys. I'm going to keep an eye on it, and I'm going to revisit it and see how many more shares I want to pick up. But that is definitely TBD, guys. If you're new here to the channel, this is Cash Flow Cart. I love dividend growth investing. I'm glad to have you here. It would be awesome if you could hit that subscribe button, guys. And like I said, I post videos every Monday at 6 p.m. I've also been doing some YouTube shorts, but, I'm guessing you guys really don't care about YouTube shorts that much. I know I definitely don't. So if you hit that subscribe button, guys, you will see my videos show up in your recommendations, and I'd love for you to be a part of this community, guys. Let's continue to build wealth for the rest of the year, and everyone have a great week.